I think that building things is a very noble pursuit. And it legitimately does not matter whether you succeed or fail. It matters whether we create a collective culture of building in this country.
Please take it away.
Thank you so much. Before we get started with the conversation, I just want to note, I'm very happy for the first time ever to be on the BetaKit keynote stage at INNOVATEwest, the first INNOVATEwest. We work with the team behind this event, Cube, all across the country. We're at SAS North. We're at all the tech exits. I swear to God, we're even at their talent events sometimes. And they do a remarkable job. We are so lucky and fortunate to be, the media partner that gets to deliver a stage for you all. I just want to shout out some people, particularly Aaron and David, who are not here today, who work tirelessly behind the scenes to make these events happen in Canada. And I'm just really happy that we have a locally grown tech event in Vancouver, and I'm super happy to be here. So thank you for having me. Okay. Let's get started. And then we'll take a picture at the end, too. That's not just for Guy. We'll do a BetaKit keynote stage photo. But we got to set the context because it's a busy day. I don't know who scheduled this. It wasn't me, but the budget drops later today. So I think this is a very apt conversation to be having. Just this morning, Payments Canada announced that real-time rails, a huge component of modernizing our financial stack in this country, will not be here anytime soon. 2026 for industry testing, and then TBD anytime later. We are in the midst of a national productivity crisis. We're certainly mired in a competition crisis. And depending upon who you ask, and I'm going to in a bit, we're in the midst of an entrepreneurship crisis in Canada. So I'm really carrying forward the optimism the guy brought to the stage here. I'm hoping for this conversation with the two of you, we can use fintech and maybe entrepreneurship as a wedge to do some very, very serious Canadian problem solving, by which I mean I'm going to ask you a lot of questions and then rely upon you to answer them. But I think maybe I'll start, Daniel, with you. I want you to talk to me about Canada's GDP and your LinkedIn productivity concern trolling that you often partake in at a weekly basis. And maybe just I set a very high level stage, but I'm a liberal arts major, so I came with no data. So do you wanna lay this out and how you view this? Because I think it's core to what you try to build with Koho and how you approach building it. And I think it'll be a way that we can lead into a bunch of other things.
Yeah, no, let's dive into the juicy stuff. So I think we need to start with where we are in this country, and because GDP and GDP growth in particular is kind of like a pernicious problem, but it's very difficult to notice while you're living in it. So there's maybe a few ways to think about this. Carolyn Rogers, who's the Deputy Minister of the Bank of Canada, who's a public official, said that we have a productivity emergency in this country. And that's very rare for a public official to speak so candidly. There's maybe a good way to unpack this is somebody went back and looked at the GDP growth of America through the 20th century. And America grew about 4% a year. And then they said, what happens if America grows 3% a year? And so you just lose that marginal 1% of growth plus compounding. And what happens is today America has the wealth of Mexico, right? So how different does the world look? How different does World War I look? How different does the surplus growth of that marginal percentage of GDP went on to fund research and NGOs and incredible artists and vaccines and incredible progress for hunger, for lifespan, many of these dimensions, and that was a function of GDP growth. And here we are in Canada, so now we'll track to Canada. The GDP per capita growth in this country has been 2.4% in the last 8 years, which means if the average Canadian produced $100 in 2016, they are now producing $102. And so if you play that tape forward, that puts us at the bottom of the G7, almost the bottom of the G20 today, and going to the bottom of the G20. And the reason that it matters is because, and the reason that I care about it a lot, is because I have 2 young kids, and I care deeply about the opportunities that they have in this country. I think it's a wonderful country with incredible natural resources, the smartest people, some of the smartest people in the world, incredible immigration, and we will have a completely different set of opportunities for our children if we don't start to figure out this GDP growth issue.
Yeah. Okay, I lied. I did come with data. I'm getting this from the Financial Post. Our country's productivity has fallen for the past 13 quarters, so we're now basically back to where we were in 2016, which is pre-COVID, which does not sound really, really great. I'm wondering if maybe just to follow this through, and then we'll get Mike in on this. How do we connect that? Like, obviously you care. Harley Finkelstein at Shopify says that entrepreneurship is a form of problem solving. So I'm assuming that what you're doing with Koho is digging into this. But is it through, like, how do we connect this to fintech? Is it competition as a driver? Because you've been banging the drum a lot about wanting a seat at the table to compete with the big banks. You have applied for a banking license. Or is it just like, given some of the products that you have, there's like a level of Canadian financial insecurity due to this productivity gap that you're supplying stuff for? Is it super meta in the competition, or is it tactical?
It's both. So let's talk about what we are trying to do with Koho, and now let's talk Canadian banking for a second. So there's a recent report that came out that said the average Canadian pays $654 a year in bank fees, which is the highest in the world. Now, if you have more than $5,000, which 2/3 of this country doesn't, but for the 1/3 that do have that squirreled away, you're not paying bank fees, which means this average is actually, the lion's share of that burden is being carried by people who are in the lower and middle income. Now, at a very base level, that's a 1.5% to 2% tax on the average income of a 40,000 Canadian, $40,000 income. So, and the kind of like way that we talk about this internally is whatever a life of financial stability is in this, or whatever life of agency is to a person, if you don't have financial stability, it is very difficult to live a life of high agency, whether that's going back to school, putting your kids through school, not having to work 2 jobs, spending more time with family, whatever that. And it is a fact that Canadians, many of the people in this room should retire with 30 to 40% more wealth than they otherwise would. So that's one dimension of it, and that bleeds straight into social mobility, which is a big part of GDP growth and wealth innovation.
Yeah.
The second component, sorry, just to wrap, is we at Koho have spent 2 years getting a bank license. We'll probably spend another 2 years trying to get this bank license. The direct corollary between like free market and competition and the things that create innovation, which drive that outer band of GDP growth, are very challenging in Canada. There's a thing called the Learner Index. It's a metric of market efficiency. I've probably looked at 50 countries, and it's a metric of how competitive banking dynamics are. I have not found the only country that I've found with a less competitive banking climate in this world is Qatar, across the 50 things that I've looked at. So
We're number 2. Awesome. Okay. And I should note that, just so you don't have to, you recently relaunched a product called Cover, which is kind of like an interest-free overdraft protection, which is not a product that we should necessarily want or need to celebrate in Canada, but is like necessary for a lot of those people who do not have anything beyond paycheck to paycheck in their banking accounts. Mike, I want to give you the opportunity, because I set up a lot of context off the front, to react to the productivity stuff broadly, but we can get into like specifically how you guys are enabling this, or swimming against the stream or with it at Wealthsimple, because you guys have, I would say when it comes to housing affordability, done some stuff. You have a first home savings account that you're offering. You did an interview with BetaKit contributor Jared Linzen talking about how you're considering kind of mortgage products. We can go there right now. You can give your riff on the productivity crisis. I'm happy to follow you on that.
Well, thanks for having me. Why don't we talk about productivity? So I don't actually see the most important challenge is getting financial services right. Give Dan and I some time. We're working on it. We'll get there. If we want to fix the opportunity for Canada, we got to build more stuff. And when I think about the challenge that we're facing, I'm pretty nervous about it. When you think about Canada and what we do 2 things really well. We pull things out of the ground and we finance pulling things out of the ground. And if that is the story that we tell ourselves in 20 years, I think we are in deep, deep trouble. And there is, extremely concerning data that I saw from the BDC just late last year that showed that today in Canada, there are 100,000 fewer entrepreneurs than there were 20 years ago. And so when I think about the productivity crisis, sure, I think we need better banking. I think we need lower fees. We absolutely need more affordable housing. But what we really need is more people taking risk, more people starting companies, more people working on making Canada a better place to live and more innovative economy. And so that would be my big message on productivity.
Okay, I want to talk to you about that, and because I just did an interview with Rachel Zimmer, the CEO of Simple Ventures. That's coming out on the BetaKit podcast next week. You can check that out on BetaKit.com and check
great.
the podcast tab. Like and subscribe, please. Thank you very much. But going back to the high-level thing, in that interview with Jared, you had talked about, I think you're speaking to this now, we face regulatory challenges, which we won't do that in front of you. We'll go grab a drink and talk amongst ourselves with that stuff, because that's what entertains me. There's a protectionist history, and that has created a culture of mediocrity, which we need to shake off. And for as long as I've known you, you have been a very even-handed dude, to the point where I will often try to cajole you into saying something of the level of fire which that spice was thrown out of your mouth. But I think we're all men of a certain age here. We look like we could maybe open for Mother and the right club and venue. I dressed appropriately. I know what Vancouver's like. My partner's from here. But I think we're all of a certain age enough to recognize that there is something slipping in Canada, and you can feel it in the abstract if you're talking about the indexes, or you can feel it when you try to take an Air Canada flight from Toronto to Vancouver and you want to crash that thing because that would be the only true justice in the world. I was losing my mind at how poor the service offered in whether it's banking, whether it is air travel, whether it is telecom in this country. We are constrained by these things. Do you feel like with what you're doing with Simple Ventures, which is a startup co-creation firm looking to bring products that do not exist in Canada to Canada and co-create with Canadian founders, is a more direct solution to the problem than maybe what Wealthsimple is offering? Because I'll go back to the mortgage thing. You're considering that. I'm wondering how even the best mortgage product in Canada, if it was offered by Wealthsimple, would really help a country where no one can afford a home.
Well, on Simple Ventures first. So Simple Ventures is a new business I've started on the side. The CEO is Rachel Zimmer, and it is I'm actually going back on a promise I made. When we partnered, I promised I would never sit on a panel ever again to talk about how Canada needs to be more innovative, and here I am doing exactly that. But Simple Ventures is our answer to that. We're trying to launch 5 companies every year focused on making Canada a better place to live and life better for Canadians. And so the whole philosophy is stop talking about the issue and get out there and build some more companies to tackle it. So that is my main, a huge passion for me. Thank you. In the Wealthsimple context, I think we exist to try and help Canadians achieve financial freedom. And that feels more out of reach for people than ever before. And so the philosophy that we take to people's financial services is how do you, instead of the way I think a bank typically would approach the problem of how do we create the most profit-maximizing products that we can, how do we create the most enduring client relationships that we can? So when we think about launching a mortgage, if you've ever had the opportunity to buy a home, you've probably had the experience, you walk into your bank branch, you've been banking there for 20 years, you thought you were a loyal customer, and you say, I'm so excited. This is a big day for me. I'm here to buy my first house. Can I have a mortgage, please? And what happens next is you're handed a stack of paperwork. The first question is, what's your name? Where do you live? It's like, well, I've been banking with you for 20 years. I think you know me by now, but okay, we can forgive that one. The next thing that happens is if you get approved for your mortgage, you're given what's called the sucker rate. And they hope you don't know that you're supposed to go negotiate it. You're supposed to get a competitive offer and come back and actually negotiate your way to the best possible price. And I think it's kind of crazy that that's the way we treat our 20-year relationship customers in financial services. So if we get into mortgages, or when we get into mortgages, our whole philosophy is how do we look at the entirety of a customer relationship and price that product at the very best possible price on day one. And what we expect is we're going to be able to beat most mortgages on the market as a result of that. And is that going to solve the housing crisis? Absolutely not. But are people feeling the absolute challenge of meeting their mortgage payments right now? And is the dream of home affordability slipping away for most people? Absolutely. Is a little bit of help going to get them a little further? Like that is the way that we're trying to tackle that problem. And I think we want to take that approach to every product we build.
Okay, so you've got some targeted easing that you can supply to the meta overarching kind of issues. Point taken there. I want to get back to the entrepreneurship stuff, but Dan, I'll follow up with you and see if like that approach resonates. Because I would say, this is my opinion, grounded in nothing, that maybe Koho has a similar approach, even if the target Canadian customer might be a little bit different than Wealthsimple. Like at least on the home ownership front, you guys, along with Borrowwell, for a long time have had like a rent product that allows paying rent every month to go towards your credit score, which is a huge factor in way too many things of everyday adult life. The feds have announced that they're going to try and make that de facto standard thing. You were very, very early in doing the work to convince the powers that be to allow that product to exist, even though it should. Is what Michael is saying resonate? Do you see a different track there?
Yeah, so maybe, so the way that we talk about this internally at Koho is there's probably like two definitions of trust. And I'll trade in tropes for a minute, but maybe it's useful. So there is a certain percentage of the population, and maybe that's a 75-year-old grandma who it's very important that she walks into a bank branch and she talks to somebody and that she knows that that's a big institution that's going to be there tomorrow. And that's like a really worthwhile definition of trust that serves that constituent well. The definition of trust that we care about is we obviously don't have a branch or any of those kind of broader infrastructure things, but when people use Koho, it is obvious that we are going to act in their best interest, and we are trying to make it very clear that we will act in their best interest. And then they don't have to do the mental overhead of like, is this a good product? Is this a good mortgage rate? All that kind of stuff. And we actually think that the incentives are aligned such that that is how you build a lasting, enduring, and useful business at scale, is to act on users' behalf over the long term and not have them to do that trust equation. So I do think it's the right posture. You know, that when all of these things are not going to be straight lines, like, and I think when we talk about open banking or RTR or mortgages or rent reporting, you know, when Visa and MasterCard were started, it was madness. These things would have had 20 or 25% fraud rates. They were mailing pieces of paper all over the country. And I think about that a lot because I think that Visa and MasterCard are like two of the best tools we have ever built to connect the world. And I ask myself if we would have like the risk appetite to go do those things in this country today. Not like, forget the country, would we have the appetite to do that at Koho? And it does take a certain amount of complexity and lack of clarity and things not working for a while, and that is what financial innovation actually requires. And that is like something that we need to lean into, not just in terms of, you know, bank license and all these other things, but these very new worlds around rent reporting and some of these, you know, nascent mortgages and all these other kinds of things.
Would you say Interac eTransfer was the third best product ever?
Would I say what?
Interac eTransfer was top 3 if it was Visa, MasterCard, number 2.
Yeah, I went Visa, MasterCard, and very close third.
Okay.
This episode of the BetaKit podcast is presented by Osler, Hoskin, and Harcourt LLP. Now, Osler is the leading business law firm for startups, high-growth companies, and investors in Canada, and the firm has released its 3rd annual Deal Points Report, Venture Capital Financings. It's a comprehensive study of 486 anonymized Canadian venture capital and growth equity financings. The report looks at deals from 2020 to 2023, valued at approximately $8 billion and provides data and insights for founders, entrepreneurs, investors, and advisors contemplating transactions. To read the Deal Points Report Venture Capital Financings, head to osler.com and tell them BetaKit sent you.
You mentioned trust. I know when we were like doing the prep call about this, we were like, are there some lessons in leadership here? I want to maybe talk about like the culture of this because I think both of you are on the same page. Like Mike, you're literally wearing a jacket where the back of the jacket says "Keep it simple," which is absolutely fire. That there should be a level of simplicity towards these financial services that everyday Canadians can engage with. BetaKit cover, we position ourselves in the innovation space right in the middle between incumbents and disruptors. And I think in fintech specifically, there's never more tension between what the incumbents are saying is necessary or what trust is, and then what you guys are saying could be possible if given opportunity. I'll just throw this open to both of you. Can you, for the audience here, maybe break down some of the cultural reasons why we seem to be stuck in the mud with some of this stuff that you guys are pushing against? Just for context, Dan, when you guys applied for the banking license, you brought in Peter Aceto, formerly of Tangerine, ING Direct, to head Koho Bank. You're heading Koho Tech. You, on the BetaKit podcast, which you can find on betakit.com, spoke to me very specifically about keeping the culture of the financial services product separate from the culture of the tech innovation. Do you guys wake up every day and you're like, how do we make financial services tech? How do we bring that entrepreneurship culture to the most airtight space in our economy?
So the way that I think about it, so maybe just like another quick anecdote. So first of all, I think I can speak for Mike here. We make no excuses for we knew the game that we were playing in Canada, and it's our job as entrepreneurs to figure that out. So whatever the regulatory regime is, you can't like put up your hands. You just have to participate and do your best with the existing opportunities in front of you. It's worth it to kind of like compare two different stories though as we think about this. So when we launched in 2017, I would say that until 2022, and at this point we were doing, we had over 1 million clients, we were doing billions a year in transactions. We had the first fund attempts when people would first add money to Koho would fail 25% of the time. Now that is like a broken payment engine in every sense of the word. And if you compare that to folks that came out of the EU, Revolut, and some other people who've gone on to build wonderful businesses, they went from founding to payments license in about 9 months and a full bank license in 15 months. They would have been a fraction of the size that we were when they had a full bank license. So that's the difference. But I actually think like, I am what we should not, like, I obviously have a perspective, and the CEO of RBC would have a perspective, and many other folks would have a perspective. What I actually care about is like we let the market solve the problem. And I don't think that we're doing that today because we haven't set up the conditions for folks to be competitive. And maybe I'm wrong, and I'm happy to be wrong, and the market will tell me that I'm wrong, but we actually just like have to let the market choose. And that requires supporting competition and all the things that we're talking about here.
Mike, does that resonate with you?
Yeah. I think Dan said it well, which is I hate the complaining game. That's not the game that we play. I think we play the game of we care deeply about this country, we care deeply about our customers, and we take first principles thinking to the way we approach regulation. We are a highly regulated institution. And for good reason. When you think about why these regulations exist from first principles, in our space, it's fair and efficient capital markets, and it's making sure that individual investors are taken care of and protected.
Do you think you have some escape velocity on that now that you're doing like $30 billion in assets under management? You're on, like Wealthsimple sits on a variety of the important decision maker boards that allow that access. Like, have you punched through to a level where you're comfortable now? Just like,
I think we definitely
story.
have achieved more influence today. I mean, we open, an outsized share of the growth in the investment industry is coming to Wealthsimple today. I think it's, over a third of all the FHSAs in the country since the account was introduced are now with Wealthsimple. That, I think, enables us to have conversations and perhaps participate in a way that a newer entrant might not. But we've been having these conversations and trying to be at the table from day one. When I think about it, when we launched Wealthsimple 10 years ago, almost this September, you couldn't open an investment account in this country without paper. The final step of the investment process was you sign up online, and then Print off this application, sign it, mail it, walk it, or fax it into the local bank branch to open up the account. And we said, well, that's crazy. We got to fix that. And so we met with regulators on how is it possible that we could enable people to have an online account opening process in Canada. How could we enable clients that didn't have $2 million to invest to get access to really sophisticated financial advice? Because in the country, the way it used to work was the only way to get access to financial advice is you'd have to sit down face-to-face with a financial advisor for an in-depth conversation about your entire financial picture. Good spirit behind that. You want to make sure clients are getting good advice, sound advice. But if you've only got a client that has a few $1,000s to invest.
Yeah, your access to that advice beyond the FaceTime is also your net wealth in the first place, right?
Exactly. And so our approach from day one has been, how do we work with regulators to shape the rules so that they benefit Canadians? It's never been to shirk the regulation. It's never been to complain about it, but work actually very closely with regulators to try and fix the problem.
Okay. Based upon my mental math and the helpful hand signals from the audience, we've got 5 minutes left. So I got 3 questions I want to just speed run past you guys, and then we'll close this thing off. I'm wondering just first, because it was announced this morning, just these can be tweet level answers if you're comfortable. Given that we will not see industry testing of real-time rails until 2026 for a product that was supposed to be here in 2019, then 2022, then mid-2023, what is the impact of that on what you guys are speaking to? I didn't want to answer this question, I'm sorry.
Yeah, look, it's nothing breaks. It's symbolic. We've been talking about open banking in political offices in this country since 2017. It's been studied every which way you can. Same thing with the RTR. It's completely consistent with the incentives of the environment that we're operating in. So, shrug your shoulders, get back to work.
Sames. Given that the budget drops in like 3 hours, and what you say here will be forgotten in a minute, any predictions today?
I'm extremely nervous.
Send tweets.
We talked about how Canada needs to be more competitive, and I worry that we might introduce new taxation, in particular, new forms of taxation, several forms of new taxation that make us even less competitive and disincentivize investment. And this is speculation. The budget's not out yet, so I want to hold all comment until we truly know what's happening. But I think it would be a mistake if we make Canada even less competitive at such an incredibly important moment in time for us to embrace competition and productivity.
Can we just chat? I think that's exactly right. Look, we've talked about regulators and competition in a lot of different formats today. I think this is on the average Canadian. I think about this a lot. Like, what is the Canadian equivalent? And this came from Harley, but like, what is the Canadian equivalent of American exceptionalism? And we sell it like this is a cultural apathy that we have in Canada, and I think we need to stop celebrating our politeness. I think we need to get comfortable beating our chest. I think we need to get much more aggressive, and I think we need to elect folks in office who recognize the necessity of competition in this country. So it's not just about the regulators, it's about what we choose as Canadians.
Okay, I appreciate that. I want to note that both of you guys are at least 10 years in now and into this journey with your respective companies. I'm wondering, to close this off, I ended on a positive, but some guidance towards people in the audience. What advice, what major piece of advice would you give to a new fintech founder in this country? How would you set them on the right path? I'm sorry.
I would say thank you. Go and build. We desperately need it. And I would say stop worrying about these conversations about when is RTR coming, what's the competition bureau going to do. None of it matters. Focus on your customers. Solve a real problem. Keep iterating your way to do it. And be, I like the phrase, be naively ambitious. When we started Wealthsimple, everyone told us it's never going to work. The banks have a monopoly on trust. No one's ever been able to crack financial services in this country. You are not going to be the first to do it. Today, Wealthsimple is the most trusted financial brand for Canadians under 45. We are incredibly excited about the path in front of us. And I just hope that, if nothing else, that inspires many more entrepreneurs to take the plunge, believe that they can do it, and just get out there and build.
Awesome.
Jen, you got anything to add, man?
That was superb. Look, the only thing is that I think that building things is a very noble pursuit. And it legitimately does not matter whether you succeed or fail. It matters whether we create a collective culture of building in this country. And I think that we worry too much about the stuff on the margins with RTR and all these other kind of things. Just like anything that's not building in your early days is a distraction. Anything that's not talking to customers, anything that's not a prototype, kill it all. Only those things matter.
That's awesome. Okay, INNOVATEwest, get building. Not today. You got to be here. I hope you enjoy the rest of the content on this stage. The team worked really, really hard to put this together. Thank you so much for this. And I want to do a photo. We don't got a book. We have a website and a podcast, the BetaKit podcast. So can you guys just like, if I stand up and take a photo, just like wave your arms like you're excited that exists? Okay.